Hello trader, welcome to the channel again. André Cardoso here, and once again to cover some of the patterns of the Forex market. For today, let's start with the cable. I'm seeing the potential for the edge and shoulders pattern formation for the cable. We have support at 126.87. I believe that a fall below this fractal level should trigger a move to the downside. Let's see how the market unfolds for today's sessions. For the euro versus the dollar, already below the fractal support at 107.87. A nice violation of this fractal already happened last session. We have a bullish crab pattern projected at 107.07. I think, and I'm not mistaken, I projected this pattern before. I talked about this pattern before on Twitter. I posted also on social media the potential formation of this pattern. Let's consider also, and based on what we can see at this point, so the pattern completes at 107.07. It's a golden Fibonacci extension, and in order to complete this sequence or this bullish crab pattern, actually what we need to do is to print a three drives pattern formation. So it requires a new lower low. And if that happens, we will be talking about the potential three drives pattern formation. So we are talking about a potential channel, or a kind of a parallel channel, and those lows should be printed in divergence. So we have the first low already oversold. We have the second one also extreme readings, as you can see. And then in order to complete that bullish crab pattern, we need to see a new lower low on the euro dollar, and probably that requires also, it will be formed also in divergence with the previous lows. So that being said, pay attention also to the potential move to the downside, one last move to the downside on the euro versus the dollar in order to complete the three drives pattern formation and the bullish crab pattern. Then we have the Aussie. We are forming a bearish flag pattern. At least that's it looks like a bearish flag pattern. I assume the market will break in the direction of the previous momentum or a previous swing. And that being said, I'm waiting to see more bearish momentum also for the Aussie. In particular, I'm interested in this price zone near 65.22, 65.14. So we have a nice cluster zone in order to complete both the bullish butterfly pattern in gray and this yellow bullish crab pattern, also projected at the same price zone, a few points above at 65.22. So this is my expectations for the Aussie. I do expect a more bearish momentum. Then we have the Kiwi. We have a range for now, 61.50, 61.16, major support level at 60.87, which converges with the previous resistance, as you can see from April. And we need to assume that if the price breaks below these levels, which converges with the neckline for the edge and shoulders pattern formation, so we need to assume if the price breaks below these levels, it should trigger the edge and shoulders pattern. That pattern should target the 200% Fibonacci extension level that points to 59.90, which converges with the 61.8% Fibonacci retracement level, and a few points above we have the bullish crab pattern also at the golden Fibonacci level. So that being said, pay attention not only for that move to the downside, but once we approach this price zone, we should pay attention to potential or eventual bounces for the Kiwi. Also for the Australian dollar versus the Kiwi, I shared yesterday on Twitter this potential bounce once we achieve this golden Fibonacci retracement level at 107.38. Actually 107.44, so this golden Fibonacci represents a major Fibonacci level. So this is in red. We can see the 61.8% Fibonacci of this entire swing high, and the market has found some pressure near this zone, as we can see. And yesterday I shared the possibility to bounce or of a bounce from this golden Fibonacci, the black one at 107.44, which represents a retracement from this last swing high, or the most recent one. That being said, the market has bounced as expected. Let's see if there's room, at least we see room here for moves to the upside. Let's see if that will happen or not. That will depend also on the Aussie generic performance. Let's see and let's observe. But for now we have some room, and that's one of the ways of, or let's say one of the paths to achieve the 38% Fibonacci retracement is to complete this kind of a symmetrical projection above resistance. Then we have the Canadian dollar. I shared also this pattern before with you, the eventual ABCD pattern and the bearish shark pattern projected at 38.19. It looks like it didn't require it didn't complete the pattern, so it didn't require these prices to start to pull back, and it started to pull back once I published the chart. So I believe there's also room for the Canadian to pull back at least to the previous resistance levels, 137.11, 137.10 actually. It's feasible. Let's observe. CHF, nothing to report for now. Previous structure support may act as resistance. It's the previous daily fractal support, 89.87. This is a level of pressure. Now, as you can see, we have also the golden Fibonacci extension, a minor Fibonacci extension level. So this is an extension from this, I'm trying to pick this line, this is an extension from this last swing low projected above, so 89.90, and that converges with the previous fractal support levels. And that being said, I assume if that persists, the market should pull back again, back to the previous support levels. Then we have the Norwegian krone. I shared this one last week, and also on my previous video. Bearish shark pattern completed at the golden Fibonacci extension level. Pullback is expected, 38% Fibonacci retracement already acting as a support, as we can see, retest of the highs. So at least based on what we see at this point, we are forming kind of a consolidation triangle right there for the Norwegian krone, and as you can see, recovering the previous weekly fractal support 10,627. So that's the previous fractal support level, and it remains above this fractal support, at least for now. For the Mexican peso, nothing to report. Actually, we need to increase our time frame in order to get synced with my projections for this pair. Once broken the monthly fractal resistance from October, I assume the market will keep trading higher. So we have already projections at 127% Fibonacci extension and the golden Fibonacci extension levels, 1909, 1986. So those are my next pressure price zones for the Mexican peso. Nothing to report for now for the Japanese yen pairs. As I said before, I will make a special blog and a special video just for those pairs as soon as I start to see something unfolding in terms of patterns. And jumping directly to the euro versus the pound, I shared these potential bullish deep crab patterns, crab patterns yesterday on my last video. It looks like there was a very small and shy attempt, but completely failed. We have new lower lows. As I said yesterday, those patterns, even the most perfect ones, sometimes will fail. And as I said yesterday, there's also the possibility to come and reinforce this channel support level again. I was expecting a bounce and then later that reinforcement, but it looks like it goes directly to the fractal to the support level of this channel. So pay attention now that the market is threatening the invalidation of these patterns. Pay attention to the reinforcement of these channel support levels, and I suggest some caution once we observe an approach to this structure support. Then let's go to the euro versus the Aussie. Very similar situation. We have a bullish crab pattern, actually bullish shark pattern projected at 62.20 back to the weekly fractal support. The market already completed the pattern. As you can see, we have a nice bounce. After completing that sequence, we can reduce or decrease our time frame just to identify that sequence. So we have completed the bullish shark pattern at the golden Fibonacci level. So that pattern suggests a bounce towards the 50% Fibonacci level. So pay attention to this 163.19. So that level may act as pressure level to the downside and as element of resistance if achieved. So let's see how the market will react here. So we have also for the euro versus the Aussie the bullish shark pattern completed at 62.20. Then we have the euro versus the New Zealand. I also called your attention yesterday for a potential bounce from this structure support, and after completing that bullish shark pattern at 75.88, there was a nice bounce, almost achieving at least a 38% Fibonacci retracement, but very far from the default target at 78.30. As I said yesterday, I pointed out these levels yesterday. The moving average, as we can see, exerts some pressure, and the price was forced to trail even lower, printing new lower lows and breaking the previous support level, of course, invalidating the pattern. Now we need to wait eventually for retest of the monthly fractal support, not to ignore that possibility, or the eventual bounce now that those stops have been hunted below this daily fractal support. I will not be surprised to see at some point in the future a violation of this resistance level, but for now we need to wait. We need to see how the market will behave from here. I will not be surprised, as I said, to see a retest of this major fractal support before starting to think on a bounce again. Then jumping directly to the pound versus the Aussie, I also pointed out the possibility to form patterns above 94.36, and it's still one of the possibilities. We're still retesting this previous broken resistance, so we still have these levels to respect. So if the price trades, or if the price recovers this previous resistance, we are in trouble. Probably the price will be pushed lower. But since we still above these previous fractal resistance levels, we should consider the possibility to form patterns above. If those patterns starts to emerge, we should consider the possibilities of a pullback. Specifically, this bearish crab pattern, I want to see if the price comes above and retest this previous resistance level, and if that happens, I will consider the possibility of a retracement and to take advantage of that possible pullback. Pound versus the New Zealand. Something is starting to emerge for the pair at this point. Eventual, and this is a very remote situation here, I'm seeing the potential, let's say, an eventual edge and shoulders pattern formations. We have the head, eventually the right shoulder formation. So we pay attention to the resistance level. So if the price breaks above, let's say 208.93, so this is the previous fractal resistance level, if the price breaks above that level, it should trigger momentum to the upside. But usually on those situations where we start to see a nice pullback or a nice retracement, and then the price starts to print an edge and shoulders in the middle of the range, or of the major range. I'm talking about this major range between the weekly fractal support and the monthly fractal. Once we start to see the formation of the head and shoulders pattern, usually the market will trade even lower. So it does not give sequence to this pattern. So, but sometimes if the price confirms the violation of the fractal, that should trigger the momentum. Okay, but usually the market will not break the resistance level. So it will threat with a visual pattern just for you to start to trigger your positions, you know, in order to try to anticipate the move. And once there's a lot of people trying to anticipate the move that there's no valid yet, the market will pull back again and will hunt your stops, which usually will be positioned below the head. So that being said, those traders who start to try engaging the market without validating that pattern may suffer the consequences of that temptation. You know, you need to wait for the breakout of the resistance. If that doesn't happen, the market will pull back. And if you start to anticipate that move just because we have the shape of the pattern, probably you will suffer the consequences and the market will not print that pattern. So we are talking about a visual sequence. As you can see, this is not very difficult for you to understand, not for you and not for anyone. We have a visual pattern here. It's not confirmed yet. It's very much the same as finding a double bottom or a double top. We need to wait for a breakout of the neckline, and if that doesn't happen, there's no double top or double bottom. Okay, so we have a potential or an eventual inverted head and shoulders pattern formation, but that pattern only triggers with the violation of the resistance level. If that doesn't happen, if you try to anticipate your move, probably, and if there's enough people doing the same as you, the same mistake, the market will hunt your stops. So please wait for the violation of the resistance, and then if you want to be aggressive, you can try to go directly with that trade. If you want to go more conservative, wait for the retest of this resistance level, and once the price starts to bounce again, you can try to take that trade to the upside. That being said, that finishes my vision for today for the Forex pairs. But for today, I also want to cover gold and silver and share those thoughts with you. So we have what we may call a bearish flag pattern in blue, as you can see. We have the daily fractal support at 286. So we have this fractal support right there. 277, we have the previous fractal support, weekly fractal support, and we have a range already, a minor range between let's say the most recent resistance level at 319. So basically we're still ranging this price zone, forming what we may consider a bearish flag pattern. A bearish flag pattern obviously usually breaks in the direction of the previous move. So if it is a bearish flag pattern, we assume there was a bearish swing to the downside before. We assume there will be a next swing to the downside after breaking the flag pattern. If that happens, of course, we will pay attention to this price zone 2251. We have a symmetrical projection right there, an ABCD pattern projected there, but I'm paying attention to the potential bullish butterfly pattern a few points below 229 and 169. Eventually, if the price keeps pushing lower, we will talking about the bullish crab pattern at the golden Fibonacci extension level. For now, I'm paying attention to this price. Actually, for now, I'm paying attention to the potential breakout of the flag pattern that may offer some interesting moves to the downside. But once that happens, we will pay attention to the eventual bullish butterfly pattern, which is projected below at 127% Fibonacci extension level. So we don't have any specific harmonic pattern for gold, actually for silver, but we have what we may consider a descending wedge inside this parallel structure, if you want to consider this previous support level. now being reinforced. So we have what we may call a descending wedge above the previous support level, or above a trend line support. I assume that a breakout below this wedge pattern formation should trigger at least this a retest of this golden Fibonacci level. That coincides with the formation of this ABCD pattern. We have kind of a symmetrical projection also for silver, which comes just above the golden Fibonacci level, a few points below the previous or the most recent support levels. So that being said, a breakout of this wedge, and pay attention to the potential bounce and recover. So we are talking about a move or a threat of a violation of supports. Let me try to represent this. So we are talking about a potential threat of a major breakouts. Many traders probably will be positioned to the downside, expecting the market to come down. It's feasible. Breakout of the structure support, that can happen. But one of the things that I'm also considering, it's kind of a false breakout of the support, finding new demand at the golden Fibonacci levels, 28.49, 28.50, and once the price ends these and once that happens, the market will hunt those stops for those shorting the market. So basically, those who attempt to short the market at this price zone, they will probably put their stops above these highs, and the market will hunt those stops printed or positioned above. That's just one of the possibilities. The other one, as I said, it's a continuation of the move to the downside. It's feasible. It's not impossible to happen. And well, we need to pay attention to both situations. So that's all for today. I hope you enjoy, and I hope to see you here in the next video. Have a nice week.